when you think about these people on stage, they usually talk about what they're going to do. You hardly hear them talk about what they have achieved. Jörg Mohaupt, for example, who has achieved a lot, he wouldn't lose a minute or a second on talking about the past. He would only look in the future, which is very modest, but it's extremely exciting because they always share with them what's on their mind. When I worked at Lehman, I was lucky enough to work with Lars Hinrichs on the IPO of Xing. And I'm going to do something now which is probably hard for him, but I'm going to ask him to take a step back and think about what you have achieved and how it got to there. And let's think about the topic of the panel, how internet investing is changing. I would like to ask you the question, how you as an entrepreneur, who always, I think, invested while you were an entrepreneur, so you always saw the perspective as a fiancé as well, how has it changed since you founded Xing to your transformation to Hack Forward?
I think, first of all, I should say something, a little secret about Marco. Doing the IPO with Marco and Lehman and Deutsche Bank, we always had like one day with Lehman, one day with Deutsche. And Marco, every single night we partied on the roadshow. So the Lehman part was much more fun, and the company came from a small little IPO company to, if I convert correctly today, to $500 million in market cap. So what has changed? I think the entire VC model has changed over the last years. For starting a new company, you only need little money. You don't need big servers, big storage, etc. So the capital cash requirements for small, innovative software startups or SaaS businesses are very small. So you don't need to go to the VC and ask for like a couple of millions. You just need a couple of hundred. So the entire business model of VC is not working for this kind of small amounts of money. So this had the great opportunity, and many people actually stepped into creating small funds, angel investments, etc. And this somehow works quite well. We've seen lots of new startups in Europe. On the other side, on the long end, where all the VCs moved to, larger investments, suddenly we have new folks like KKR, TA and DST who are attacking this kind of VC model from the big side and actually helping companies to prevent going IPO early and just insert more and more cash. So I think the VC model is under good pressure, but we've seen new ideas or new venture capital companies coming, like Atomico and others, who are coming from being an entrepreneur themselves and now turning into active investors. And I think active entrepreneurs who've been there, done this, are much better helpers in creating big global companies like the traditional VCs, even though that I may offend here some people in the room.
Thank you very much. Jean-David, we all know, and this conference hopefully shows it, that in the internet industry what really matters is who you know, how you know them, and how you can help them. When we talk about internet investing, your fund as such stands out by the registry of people investing. That's very special. So you do get entrepreneurs investing into you, into your fund, into your idea. Tell us, as an investor into your fund, as an entrepreneur investing into ISAI, what is the benefit you have versus other funds? How do you make your network work?
Your question is about my entrepreneurs who have invested in the fund, or in which the fund invests?
We're talking about the synergies you have between your portfolio companies and your investors.
Okay. So basically, with 70 LPs that are entrepreneurs, the way we work is a bit different from traditional LPs. The entrepreneurs that are LPs are doing many things. Some of them are doing nothing because they want to do nothing. They want to stay in their house on the Riviera and do nothing. But most of them are the biggest investor. That's funny to see. Some are very active. They provide us with deal flow. They are very responsive if we ask them some questions about the sector or something, or if we want to reference people. And some are even more active because they join the boards of the companies that we have invested in. And sometimes they have a weekly meeting with the companies, and they are really coaching or mentoring the young entrepreneurs we are backing. So there is no rule. Someone who have invested in ISAI can do nothing or a lot. But what is for sure is that the common goal of all these entrepreneurs is to allow the next generation of young internet entrepreneurs to succeed, and that's what we share.
Thank you very much. So we know two features about successful people. One, they don't like to talk about the past, they're focused on the future. I would like to add another one. They usually combine at least two talents. Jörg Mohaupt is one of these guys. He has entrepreneurial skills, but he has also investing skills. So what I would like to know from Jörg is, over the past, how do you combine these two perspectives? And given your track record, and please name like 2 or 3 of your achievements you're most proud of, tell me, what's your secret?
Is this the mutual brown-nosing society here? I would say that we are not we're not a fund, we're not a financial institution, we are an organization.
By the way, you haven't told the audience yet who we is. You have only talked about taking the banking system down.
It's a conglomerate called Access Industries. We are in natural resources, petrochemicals, real estate, and TMT. And in our TMT area, we have telecommunications companies, we have a film business, we have a music company, we have a bunch of internet investments, a couple of software companies. So it's very varied. Our business is a business that's run by entrepreneurs, and we like to work with entrepreneurs. We don't mind investing very early in great ideas with great people who have a passion for what they want to achieve, for whom it's not only about money, but also about building something and potentially changing the world. We can come in early and we can grow with these entrepreneurs and stick with them throughout the whole cycle. So, people that work with us, they don't deal with an institution where it's about, okay, this is seed, we only do A, we only do B, we only do C, we only do LBOs. We'll do anything if it makes sense. We're focused on taking a lot of risk. We're not in the camp of trying to make a 20% return. We like to do aggressive things and hopefully make a lot of money. Mostly in that process, I would say I have gained experience, and as my boss and partner always says it, experience is what you get when you don't get what you want. So I don't think we're that successful yet.
Thank you very much. Venture capital or investing into internet is about risk-taking. And a lot of VCs we talk to in Europe telling us, yeah, before we invest, we want to see revenues, 5 million, 10 million. So they want return, but they don't want risk. And VCs in Europe are hard to find, real VCs, because they want a lot, but they are not keen to take risks like some. Now, I'm interested to know in the Eastern European region, if you look at access to capital, Tomasz, what is the requirement of an entrepreneur asking for capital? Do they need to have the technology up and running? Can they come with a business plan? When you look at investments, what is the minimum requirement you would look at when you invest, let's say, 1 million or 2 million euros?
Yeah, I think we are not very much venture capital mentality. We had a default rate of 4% for the last 12 years. That if you look at, let's say, 100 million euro we invested, we lost on 4 million euro. This is not really a typical track record for venture capital. And we are not a big fan of early stage, to be honest, because we believe that the liquidity of this asset class, the premium you do on this asset class versus what you can currently do on Italian bonds, does not really motivate, if you look from the financial perspective, it does not really motivate to do the typical early stage. That what we did to do early stage, we took the government money, which we have preference on the commercial capital, that if you lose, we don't really recognize the loss on this type of investments. Yes, that this is the way how we approach early stage. Yes, from a balance sheet perspective. In terms of the market, I think there is too much money for early stage in Poland, and I'm questioning if there will be really value creation in this segment, because I'm not sure if the money are coming together with talents on the market. Yeah, and relatively right now it's quite easy to raise money. In Poland, Poland is probably the easiest market because there is a new connect market kind of aim. There are about 20 early stage funds on the market. And I think for us it will be difficult to invest. We will usually look for very unique entrepreneurs, and we will rather prefer to see some revenues. But there are people on the market which are much easier.
Thank you very much. Before we are opening it up to you, one more question to Philipp, because Philipp represents an organization which is, looking around, the only one crossing to America and Europe. And what we are puzzled about is the valuation gap between the US and Europe. While in the US you have companies raising 20, 30, 50, 100 millions, not being profitable, even listed on NASDAQ without any substantial profits. In Europe, the benchmark is much harder. And if you look at the money invested in the US, I would ask Philipp the question, when you are presenting ideas to your investment committee in the US, why is it that we haven't seen a lot of more deals of the KKRs, of the Apexes of the world, the traditional private equity industry in the internet? Because if somebody makes the math and look at transaction open table buying top table, a lot of US companies buying European companies, it looks like a very simple arbitrage game. So why haven't we seen more internet transactions coming out of organizations like yours?
Well, you summarized very neatly why we bought Nielsen, as you know. I mean, ultimately that was a company listed in Holland, but indeed it was, you know, a digital media measurement company with at least half of its business in the US. And you had not only an operational arbitrage, but you had a capital markets arbitrage by making it, you know, a more fast-growing company. We did acquire some of the, you know, digital startups that fit with it, and then relisted it in the US. Yeah. So I know I'm not answering really your question. I'm just confirming your observation that very much based on what Klaus has presented, given the more limited depth of capital availability in Europe, there's less to invest in. Now, I think given that we have an internationalization really rampant, I mean, City Deal is the core of what Groupon is, there's an increasing opportunity for European players to participate in that global and, you know, mostly American capital by contributing to those roll-ups and, you know, these later stage acceleration investments. And I think you'll see much more of that from firms like ours.
That's exciting. Good. We're going to take some questions from the audience. I'm going to give the microphone. There we have one question.
Hi, I'm Twain. I'm a software developer, an MBA, and was on the strategic investments team at UBS. My question for the panelists is, how are European investors going to become as competitive with your Silicon Valley peers when Silicon Valley is actually investing at a pre-seed and seed stage in very innovative ways? So, for example, this year we heard the news from Y Combinator that Ron Conway and DST are offering a 150K convertible note with no cap and no discount in exchange for 7% of the startup company. We have tandem entrepreneurs who are investing 200K for convertible with no cap and a discount for 10%. And that compares with what HackForward is offering, which is actually from your Passion with Motivation website, it's 91,000 euros for one founder, 141,000 for two founders, 191,000 for three founders, which converts on a dollar to euro basis as about 125,000 K for one founder at 27%. So what do the panelists think that can be done essentially to improve the pipeline at the earlier stage so that by growth stage there's actually companies that are going to list eventually?
Okay, that was a long question. Okay, let me try to summarize. I guess the question was, in the US we see some models where people are putting little money to work for many, many people and hope that one will work. I would like to delegate this question to Lars. Do we have models like this in Europe?
Thanks for the question. I don't see so many models like this, and looking at Silicon Valley and what Paul Graham has done with Y Combinator is just phenomenal. The quality of the people who are coming through the Y Combinator program is amazing. And just to get the perspective right, Y Combinator is a 3-month program. HackForward is a 12-month program. So this definitely fits in part of the question. The follow-on financing done with convertible notes, it seems to be, since there's so much investing power right now in Silicon Valley and everybody is now an angel, you have to somehow get into the financing at all. So the convertible note, which is really common in the US, is a great way to guarantee that you have a foot in the door. And we see also in Europe more and more convertible notes coming. So from DST, looking at the model of what Y Combinator has created at companies, this is the only chance to get into certain deals of high quality.
Next question, please.
Yeah, good morning. My name is Benjamin and I'm heading new ventures for Turner, which is a division of Time Warner. I'm one of the few corporate investors here, and as a corporate investor, we invest in internet startups, sometimes pre-revenue, sometimes at seed stage, sometimes alongside VC, sometimes as a sole investor. And we provide sometimes more than money in terms of commercial development or growth internationally in the US or in Asia or Latin America. And my question to the panel is, what's your perspective on the role of strategic investors for early stage internet investment?
Thank you for the advertisement for our panel at 2:35. That's exactly what it is about. You'll have a bunch of corporates like Axel Springer sharing their perspectives. I mean, I've built a company, BMG, with Bertelsmann. I think they made an incredibly smart decision to build a future division of their company, not all 100% in-house, but to basically do it in partnership with entrepreneurs on the one hand and with external capital providers on the other. So I think if you set it up like this, there's a lot a corporate can offer, because you have not only the infrastructure, the traditional assets like Bertelsmann owns RTL or Random House, where there's a lot of things those companies can be levered for. But you also have the people. This is an old idea. I mean, I don't want to quote Thomas Middelhoff from the late 90s, but that was something that many people wanted to implement, but there are very few corporates who have ever succeeded in doing it. I think the difference is that the attempt to do it all in-house failed, and now more creative models of partnership with outside capital providers are taking off.
By the way, thinking about our clients at NOAH, we have 3 types of companies we work with. We have companies who are successful and they never raised any money. There are quite a few of those. Fotolia is one of them, for example. Then we have companies that are successful with VC money, and that's probably the other half. And then there are a lot of companies, and we don't work with them, they're raising a lot of money, and they're very unsuccessful because of VC money. My belief is that the toughest bit for an investor is to find people and give them great funding, but still have them on their toes and building organizations which are efficient and bootstrapped despite having a big cash balance in the bank. And that's really an activity or a skill which is scarce. Next question, please.
Good morning. My name is Andrea Bertone. I'm responsible for Monster.com in Europe. Obviously, you are helping entrepreneurs, as Marco was saying, by providing the capital. I was curious to know what you do to help them to have the management skills that allow them to execute successfully on their plans.
No, I think crucial is basically the ability to bring the management to the companies. I think this is the only two added value which is usually provided by the growth fund, early stage, and also by the expansion funds are business development through relationship and networks you have, strategic advisory maybe related to that, but key talents, bringing key talents, we see as a really critical, and that was the basic value creation role of the fund, bringing the best talents on the in the country, in Europe. Like we have a company called Jiva in Prague, and there was a great CTO founder, and but he was not the person with the let's say go to market model, and we recruited a very experienced French CEO. Then later, when it came to execution, we recruited a top guy from Germany to basically drive the execution. This is very important to bring the best talents to the investment.
Let's listen to the numbers man.
Well, I think there's two things that are really important other than money. The first is, you know, when you roll out companies like we do, there's many experiences you have. So if you set up marketing functions or, you know, distribution functions, and what we try to do is help out the entrepreneurs that we're teaming up with KPIs. So there's a whole bunch of lead indicators that you can establish, you measure them, you make sure you incentivize your people with them. And then the second thing is, as you have learned from Klaus around the City deal example, as speed is of the essence, you need resources. So a company like ours, we have an extra task force that is a bunch of seasoned entrepreneurs and executives in all of our continents who can be lent to these companies to try to help build the new presences quickly.
Thank you. Next question, please. Amazing, we covered it. You have no more questions. So I thank very much for the panel. And we're going to the e-commerce session now.